Welcome to Balancing the Ledger, where we'll be talking about the latest news in fintech, cryptocurrency, and blockchain technology. I'm Jen Viechner.
I'm Robert Hackett.
And today we're here with David Packman, a partner at venture capital firm Venrock. Thank you so much for being here, David.
Thanks for having me here.
So I wanted to start off by talking about this ongoing SEC crackdown on initial coin offerings. There was the big news this week. They made 2 arrests of the co-founders of an ICO called Centra that was backed and promoted by people like Floyd Mayweather, DJ Khaled. David, you've invested in companies that have done ICOs. What do you make of all this?
Well, crypto's a wild space, up and down the whole stack, and certainly one of the most wild spaces of it all is initial coin offerings. Very little information given to buyers, not a lot of regulation, really none in the US up till now. Investors aren't protected, not a lot of disclosure, so it's kind of a messy space. It was inevitable that a bunch of different US regulatory authorities were going to put some rules and regulations around this and hopefully go after bad actors. There have been a number of bad actors in the crypto space, so this is good. The space should be cleaned up, but a lot of times we lose sight of the fact that there's incredible innovation happening in the space, that the notion of pre-selling coins can serve a really interesting purpose to diversify access or democratize access to technology and allow other people to participate in wealth creation that they wouldn't get to participate in. So we hope we don't throw the baby out with the bathwater here, but it's important to get some regulation around this stuff.
I mean, I gotta say, we've seen some of these celebrities posting to Instagram, to Snapchat. They've got like champagne bottles they're popping off, fat stacks of cash on private jets. It's crazy, and it's really not a good look, I think, because they're duping consumers, people who don't know any better, who think, oh, look, my favorite star is getting rich, I'm gonna get rich too if I invest in this thing.
And it's not just celebrities either. I mean, we saw John McAfee from the antivirus software.
Debatably a celebrity.
Yes, well, he's actually getting paid $105,000 per tweet to promote an ICO. So can you really trust somebody's opinion who's really just making money to promote it to other people?
Yeah, pump and dump schemes for stocks, particularly penny stocks, have been around as long as stocks have been around. I remember during the dot-com days in 1999, 1998, there were all sorts of unseemly IPOs and companies that were pursuing reverse mergers to become publicly listed and then pump up stock prices, and they really had no business being public, nor did they have a business. So, this behavior happens whenever there's wealth creation and easy money. It's also paints the entire space negatively. But so we want to find ways to get this bad behavior away from the ecosystem as quickly as possible.
And it's not just the regulators who are stepping in here. We've also seen big tech companies, Google and Twitter have said they're going to block cryptocurrency ads. Actually, Google said this week that Chrome extensions will no longer be able to mine cryptocurrency. Even MailChimp has blocked all cryptocurrency newsletters.
I think there are bad actors in the space, and so as a platform, like if you're Google, or an email platform like MailChimp, you want to keep your platform clean and get the bad actors off of it. Sometimes that takes some work. It's just a little bit too convenient for my taste to see a platform ban an entire ecosystem or entire market segment just because they're having or don't want to spend the time figuring out who the bad actors are. We're talking about highly centralized platforms who, in theory, have the most to lose from the advent of decentralized technologies and platforms. So
I mean, that's entirely what blockchains and cryptocurrencies are for, to route around big centralized entities.
Yeah, so it kind of underlines the point of why alternative structures for platforms are needed, because on a whim, a single platform can ban an entire market.
Let's talk about Ripple as well. There are some reports this week that Ripple has attempted to kind of buy its way onto cryptocurrency exchanges like Coinbase and like Gemini.
Sure, there's a lot of pay-to-play going on in this space right now, it seems.
Exactly. What do you make of that?
Well, first, I think it's important to say that Ripple is a legitimate company with legitimate investors, a really experienced management team, and is trying to solve some legitimately hard problems and bring some change to a regulated industry. So, I mean, it's a hats off to them. They've made a lot of progress. I think the truth is that there's more Western users on Coinbase than any other exchange in the world, right? And so liquidity is favored by folks who operate a currency. So you can see why XRP would want to be traded on Coinbase. I don't know anything about how the pay-to-play came to be. Whose idea was it? And has it been effective before? I don't know.
Works out well for the cryptocurrency exchanges.
Right. So, and maybe do other exchanges operate that way?
Yeah, it's worth pointing out that many of the exchanges, at least not in the U.S., are taking a minimum of $1 million just to list. I've heard it can be as high as $5 million or more.
Absolutely, and being on a cryptocurrency exchange, it is make or break for all of these cryptocurrencies. I mean, they are the kingmakers, they're the gatekeepers here. They are what allow the broader community to access these assets.
Oh yeah, these companies can probably make that money back. For them, it's a good investment because once they sell their coins to the general public on that exchange, then really it's a huge profit opportunity for them.
I think you pointed out, used the magic word. They're gatekeepers today, right? And gatekeepers tend to charge rent or a toll on users. So benefits of the advent of crypto is that we have fewer gatekeepers. In fact, the long-term threat to centralized exchanges are decentralized exchanges, where anyone can trade with anyone else without some gatekeeper in the middle. So I don't have any problem with the fact that centralized exchanges take advantage of their market position and charge, maybe Coinbase doesn't, but other exchanges who charge to be on the exchange, that's fine. But I think this is yet another reason why we want decentralized tech and decentralized exchanges.
So let's switch gears a little bit and talk about Venrock. You guys have some news that you're announcing. You're partnering with an investment group that focuses on cryptocurrencies and tokens named Coinfund. Tell us about that.
Yes, we've been spending a lot of time in the crypto ecosystem for some time and wanted to partner with this team that have been making investments and actually helping architect a number of different crypto economies and crypto token-based projects. That's called Coinfund, and we've made a strategic partnership with them. There are a lot of crypto traders in the market. There are a lot of cryptocurrency hedge funds. This is different, and in fact, to us, it looks a little bit more like venture capital because these guys are a team of well-respected crypto enthusiasts who have really helped architect a number of different projects over time. And their long-term focus, I think, aligns them a little bit more with venture capital. Venture capital is often called patient capital because we're an early stage investor. It usually takes 8 to 10 years for companies we invest in to hit maturation or exit. And that's a lot different than some of the activity we've seen around ICOs and in the crypto space.
Very liquid. You can get in and out when you want.
Yeah, so these guys, I think the Coinfund team is more aligned to the kind of stuff we do, and we're using the partnership to learn more about really quality companies that are building important decentralized platforms.
We talked earlier about how there are a lot of projects out there, plenty of scams, plenty of legitimate, very interesting projects. How do you go about deciding what you're going to invest in? How do you place your bets, and where are you looking to place them?
Well, I think it's sort of what do you bet on when, so what will be the sequence. I think traditionally, whenever there is an opportunity this large, that is as complex or multi-layer as cryptocurrency and decentralized systems are, the first place you look is at the infrastructure layer. You need to build out the infrastructure first before things at the application or service layer can exist. So we've spent a lot of time looking at protocols around decentralized compute, decentralized security, decentralized bandwidth. Look, in this country, we have the FCC deciding to negate net neutrality. That's an example of a centralized authority making decisions at almost the protocol level of what people can have to pay for and don't have to pay for. We don't like that. We'd rather see the internet not have those types of roadblocks. So
that could be pretty troubling for some of these projects that are trying to get off the ground.
Yeah, for sure. If you advantage the big guys and don't allow the small guys to enter markets, that's, again, a kingmaker. You pointed out that venture capital itself is effectively a gatekeeper industry, and I completely agree with that, and I'd actually like to see that undone. I don't believe that a small group of people should make the decisions about which projects can raise some money and get off the ground.
Well, that's what we saw last year. There was more money raised through ICOs, I think, and even in fintech venture capital, traditional venture capital, that is.
And I think that's pretty exciting, right? Because as long as the scams aren't there, that it's legitimate teams going after legitimate problems, then, sink or swim. Let's see who succeeds, right? I'd like to see a world like that. So we're making investments that are supportive of that.
Certainly, the value opportunity is there. I mean, if they can succeed, unfortunately, we haven't actually seen that lately this week. I mean, the Bitcoin price for about a week now has been struggling to break $7,000. Does that worry you at all?
As I mentioned before, we're really patient, long-term investors. I'm not worried about the price of a single cryptocurrency over the next day, week, month, year. We're wondering what happens over the next 5 to 10 years. Can we have fundamental change to a number of different markets because of a distributed ledger, a token economy that all participants can take part in? Those are pretty transformative, exciting ideas. I don't know if they'll work out. I don't know which teams will succeed. Our job is to make some bets and back some teams that hopefully can navigate it. But I'm not too worried about short-term price changes.
Well, now all you've got to do is get DJ Khaled on board.
And you get John McAfee for the low price of $105,000 per tweet.
That's right.
Well, that's all we have time for today. Thank you, David, so much for being here. I'm Jen Viechner.
I'm Robert Hackett.
And for more Balancing the Ledger, please come to fortune.com. We'll see you next time.